Hello, good evening. It's Adil Fazal, market analyst at CFDs.com. Be sure to visit the specialist in spread betting and CFD brokerage. You can certainly qualify for up to the 25% cashback bonus as well, cash bonus offer. Plus the educational site as well, www.cfds.education, to certainly learn more, where I post my charts and analysis daily. Okay, this is a European market wrap up. Okay, so let's just see exactly where we stand in terms of European markets. Now, obviously the overriding fundamental move on the markets today was all to do with regards to this source, or this talk of the ECB potentially broadening its scope of bond buying, and obviously looking at potentially negative rates. So wherever this article came from, I mean, at Forex Live as well have a tweet: how scary is this ECB source 8 days before the decision? You have to do something. How this all looks in a few years, nobody knows. It really is. It's all about this news that broke out on Reuters with regards to the ECB as a potential QE program, and that certainly sent European equities short squeezing. I mean, you look at the rally in the German Dax. I mean, we had a 280 to almost 300 point rally in the German Dax itself. So you can see a pivot low of 10.80 here from the 24th. And in almost 2 days price action, you've had almost a 500 or a 400 point rally in the German DAX itself. So 10.880 all the way up to 10.180. Sorry, 300 point move. So it's been quite a substantial move all in all, and all down to QE. Now, in terms of the data itself in the Eurozone today, nothing really substantial other than the Italian data and the French consumer confidence data as well. So it was more to do towards the US data deluge as opposed to European data deluge. Now let's just see exactly where we stand in terms of the technical picture on the German DAX. Yes, we've broken out this downward sloping, obviously diagonal trend line. Certainly have broken out of there, so this trend line is no longer obviously applicable. Okay, so looking at the larger picture, so you're back into that fib 75% resistance on the weekly chart. Looking at a daily chart, you can see that yes, we have taken out the red candle, the bearish candle post Russia, Turkey concerns, etc., and only to trade higher based on QE. Now the German DAX certainly seems to be hell bent on closing that gap above. So all eyes on that gap, given the fact that the market is only focused on that gap at 11,298. So certainly interesting to see whether or not we can close it. Now that will depend solely on the fact of the Euro USD. And really that's the pinnacle, or the most important from my perspective anyway. So in terms of the Euro USD, you can see the Euro USD on a weekly chart is obviously into support, and you can see that the German DAX, shall we say, is actually into resistance. So this is going to be an interesting game. So those of you that want to know exactly where the German DAX is going to go on the weekly chart, whether it will take out the fib 75%, it all basically hinges on the Euro USD on the weekly chart taking out the lows. Okay, now given the fact that we've had a potential rally, we've had a doji candle again now, 1, 2, 3 dojis at this zone. Okay, so this support level certainly seems to be holding around the 1.06. We did dip below it. If you look at the 4-hour chart of the Euro USD, you can clearly see that the Euro USD itself obviously is certainly touched the lower level before we started to rebound and bounce. Now we did have weaker personal spending and weaker PCE out of the US, and also weak consumer confidence, and that certainly sent the dollar lower, and obviously has sent the euro obviously higher. Okay, and obviously risk off scenario as well, that certainly needs to be taken into consideration as well. Looking at the 60-minute chart of the Euro USD, we obviously took out the pivot low there, and I was starting to trade higher. So ever since we took out the low, we're trading higher on the Euro USD. So again, all focus remains on the Euro USD. That's basically the your bellwether and the main chart that you're going to be focusing on. Just basically looking at your diagonal trend line, you are looking to potentially hold that. So it's all about Euro USD. It's all about the euro. If the euro falls, European equities move higher, regardless of terrorism, regardless of geopolitical concerns, etc. The markets basically are on this QE binge, okay, and will certainly propel higher regardless. It's totally irrelevant what the bearish arguments are. QE will negate that and defeat that to a large extent, as we've been witnessing. From a theoretical point of view, that should not happen, but from a market price action point of view, it is happening. So certainly interesting how they come out and leak this out in order to avoid a potential sell-off, given the concerns or geopolitical concerns out of Turkey and Russia. So certainly is interesting, and it's good timing as well. Very conveniently. Okay, so that's my interpretation of events. Okay, so that certainly seems the scenario, and we're going to keep an eye out with regards to Euro USD. I mean, it's short squeeze as high as 1.0640, which is very, very impressive. Okay, now going back to the German DAX itself, going to your 60-minute chart, the German DAX, we did have this potential HNS formation brewing and potentially playing out, and even that's been negated because this rally from the 10.880 has been so strong. I had this HNS, and that's obviously been taken out. The resistance here at 11.050 taken out. One hell of a move. Gap fill taken out, so one hell of a move. Even the resistance that we had here has been taken out, as you can see here, a break above and consolidating above the 11.160 level. So whether or not we can sustain this move is it's a totally different question altogether, and we shall see with regards to Euro USD. So far the Euro is certainly pushing higher, okay, and therefore you are looking at a potential risk off scenario. Now the German DAX itself, again, we need to see whether or not this is a sustained breakout or whether it's a false breakout, and that certainly will remain the question. So all we can do for now is take the pivot lows and look at potentially look for certain weakness. Okay, so with regards to the German DAX itself at present, as you can see here, we have a brewing of a bull flag, and that certainly is going to be tested, okay, in terms of the actual break itself. You are oscillating above the breakout level, so whether or not we can see a sustained break is a different question altogether, and that's something that we're going to watch out for with regards to the actual German DAX itself. Okay, now 60-minute chart, again, it's a breakout, so any dip below the level 150 is a fake out, and you will see yourself en masse. Again, all eyes on the German DAX. But bear in mind that you are looking at the 11,300 potential gap fill area zone for certain weakness. Now we can cross-verify the German DAX with the MDAX as always, and the MDAX is obviously into resistance, as you can see here, and therefore is signaling weakness from my perspective. So the move on the German DAX is certainly over from my interpretation, and we are expecting weakness on the German DAX itself. Tech Whole Share, this is another index that I use to cross-verify the strength and weakness in the German DAX, and you can see that it's an inside bar. It failed to take out yesterday's red candle, and therefore you are expecting weakness in the German DAX and a potential top in the DAX. Now that's one of the reasons why I'm actually short the Euro stocks and I'm short the Nasdaq as well. Okay, so I'm looking for further weakness. In terms of verification now, looking at the French CAC. The French CAC is obviously into gap fill resistance in the daily and 200 MA resistance as well. So therefore looking at weakness and resistance on the French CAC. 60-minute chart, you are looking at horizontal resistance being held, and therefore this is considered to be a weakness for my interpretation or my understanding. We did have an unfilled gap here, that's obviously closed now, which showed on the daily chart as well. So the unfilled gap has certainly closed, so no real reason for the French CAC to certainly continue its move higher, and therefore you are looking at weakness. Looking at the 10-minute chart, you had an inverted head and shoulders target. The pivot low was 4770, the neckline 4820, so you're looking at a 50-point move. So we hit the 4870 level, and the IHS is now complete and looking for weakness now. Okay, so looking for a potential move lower. You have this HNS formation brewing already. You have the left shoulder here. The head obviously went in for the gap. Looking for right shoulder, and then obviously looking for a move lower. Pivot high is 4910. Your neckline is 485. So looking for a 25-point move down into the 200 MA around the 4860 on the downside. In terms of resistance, you do have potential resistance here, and also support here and here. So 4830 and 4820 on the downside in terms of the French CAC. So certainly expecting weakness on the French CAC in the next 24 hours. Okay, if not sooner. Okay, so certainly indicating weakness for my interpretation thus far. Now we can cross-verify the strength and weakness or strength of the French CAC itself. CAC mid and small, inside bar still remains weak. Okay, certainly a risk-off scenario here, and looking for further weakness from my interpretation. Okay, so again, certainly no real confirmation that the CAC again mid 60 again is indicating resistance. We can look at the volatility index as well. It's an inside bar, and looking for further movements higher on the volatility index or fear index, and therefore you are looking at weakness in the French CAC, okay? Especially given the fact that you got geopolitical concerns, etc., and you are looking for weakness there. Looking at the actual Euro stocks now, cross verifying that again with the German Dax, you are back into this resistance zone. Okay, yes, the ultimate target is the inverted head and shoulders formation, which is gap fill. Can it move or break higher now? No, it can't, not with geopolitical concerns in the background. And so again, all eyes on the Euro stocks. Now, it has been again a very, very stellar move, a very, very impressive move, and in terms of the thrust higher thus far, and it has to be respected. But a 60-minute chart, you can see that we rejected that 3470 zone and we started to move lower. Now, yes, I'll confirm I am short the Euro stocks. I'm looking for further weakness. Any dip below will bring you back into this zone here around the 3430, and that obviously corresponds with the 200 MA as well. Again, make sure you're aware that the unfilled gap below at 3360 failed to close. So again, that certainly remains vulnerable to being closed and looking for further downside price action. Okay, Euro stocks, the S&P Europe 350, sorry. Still, again, no real breakout higher, no real confirmation of strength. Therefore, the move on the German DAX is certainly circumspect and will not last. That's my interpretation, okay? So, looking for further weakness, looking at your 60-minute chart, again, you are into resistance now. The move of the short squeeze is certainly over. And again, looking for further weakness for my interpretation. And that's my price. That's what price action is telling me, folks. It's basically stating the euro is certainly into support. The fact that this QE story itself has failed to really send the euro lower significantly anyway. In terms of the ECB doing QE, given the fact that the Fed, especially after yesterday's GDP numbers and obviously after today's economic data, they're locked in towards a rate cut, and therefore why would the ECB need to do QE? Just doesn't make sense, okay? Certainly is baffling, and even the report today was circumspect as well, because they were focusing more towards a potential deposit cut or a minus in terms of those parking their money and keeping it stagnant, and they want that money flowing. And QE obviously is not exactly achieving that thus far, given the fact that they've obviously increased the bond buying, and yet the inflation rate still is stagnant. So that certainly is going to be a concern. Now, in terms of commodities pushing higher, that may well be the inflation. That may well be the catalyst that that inflation needs to obviously start to move it higher. But again, that's in terms of strength for commodities. That's based on organic growth. We need organic growth, not geopolitical concerns to force oil prices higher. So again, this is going to be interesting, and in terms of the market reaction and the market moves play out going in the next 24 to 48 hours, especially going into Friday. It's going to be interesting. But for now, we are facing and expecting weakness, and therefore looking for further moves lower on the European indices. I think that's a market wrap. Take care. Goodbye. Be sure to visit cfds.com for your trading needs. Goodbye now.